Warm greetings to you accountants all over the world. This is Mr. Masachenko presenting again on budgeting. This is our costing topic. So we are going to use our step-by-step approach for you to understand this topic. So let's get ready, let's get our notes so that we can kickstart. Alright, let's start with our key terms in budgeting. The first term that we need to define together is what is a budget. I have a working definition that a budget is a statement of the future plans of the management expressed in monetary terms. So managers, when they do their plans, they can monetize those plans and then they become what we call budgets. Alright, then we've got what we call budgeting. This is a process of using the budgets now to control and coordinate the activities of the business. So budget, when we are budgeting, you are now using the budgets. Then we've got what we call a forecast. What is a forecast? A forecast is a prediction, or is just a prediction or an anticipation of the outcome of carrying on a business over different accounting periods. Then what is a master budget? A master budget is simply the income statement, the income statement and the statement of financial position. The statement of financial position and the income statement is what we call the master budget. Okay, let's proceed to the functions of budgets. Alright, budgets actually, you have got a lot of functions, but I've decided to mention these ones, and which I have given this acronym that will remind you, or that will help you to easily remember this. Budgets have a control function. Budgets facilitate the putting back to track of activity that will be diverting from the plan. Okay, anything that will be diverting from the plan, it can be put back, or it can be controlled by use of budgets. Another use of budget is they help in communication. Managers usually communicate the future plans via their functional budgets. Another function is coordination. Budgets facilitate integration of all business activities. All activities will be in the master budget, so they can be integrated easily. So coordination is another function. Motivation is also another function. Budgets, when met, they provide a sense of achievement to management and the workforce. Thus, motivation. Then also budgeting, or a budget is a form of authorization. It provides what we call pre-approval to start spending whatever has been budgeted for. Alright, then the planning function. Budgets force management to consider the future, thus the planning function. And then the last one is performance evaluation. Provides benchmarks to measure performance of managers and the performance of the entity. So if you just remember this acronym CMAP, then you are good to go. Alright, let's move on to the budgets that we will come across, that we will concentrate with in this topic, in this lesson today. We are going to start with our principal budget, which is the sales budget. Then we move on to the production budget, receivable and payable budget, the labor budget, the raw material budget, then our cash budget. All these budgets, they'll give us what we call a master budget. Okay, let's move on to another key term that is very critical for us to understand our topic better. We have what we call the principal budget factor. A principal budget factor is also called the limiting factor. But by definition, a limiting factor is anything, okay, is anything which restricts, anything that that prevents the attainment of the budgeted level of activity. Anything that restricts, it's a principal budget factor. Usually our principal budget factor in budgeting is the level of sales. Why level of sales? Because level of sales are influenced by the level of demand in the macroeconomic environment, which management has little to no control to the macroeconomic environment. But remember, we said a limiting factor is what? Anything. A limiting factor is anything. So it can be machine capacity, it can be limited labor hours, it can be shortage of raw materials. Okay, let's move on to budgeting processing. When you want to do your budgeting at your organization, where do you start? The starting point is you define the strategic, the long-term goals of the entire business. Then you form what we call a budget committee. When you are done with the budget committee, you move on to produce what we call a budget manual. Then you get to identification of the principal budget factor. When you are done with identifying the principal budget factor, as we have defined in the previous slides, you need to produce a budget for the principal budget factor, because this is the budget that will influence all other budgets. Then when you are done with the preparation of the principal budget factor, you prepare other budgets based on the principal budget or the principal budget factor. Then when that stage is done, you go for approval, usually with the executive management. Then there will be the review of variance, as you'll be using your variance analysis. Types of budgets. We have got two main types of budget that I think will be critical, that are important for you to complete your course. All right, the first one is the ZBB0 based budgeting, and we have got what you call the incremental budgeting. On ZBB, that is zero based budgeting, the idea on under zero based budgeting is simply to start budgeting from zero or from scratch. Okay, that is, every item to be included in the budget has to be justified on its merits before it qualifies to be in the budget. But under incremental budgeting, the budget is prepared based on the previous budget, then trying to update the previous budget, adjusting for inflation and other what changes. Okay, forms of budgets. We've got fixed budget, flexible budget, then flexed budget. These ones will cover them later, right? Criticism of budgets. Budgets have got promote this spirit of individualism. Managers will concentrate on reaching their own goals at the expense of other goals of the whole organization. Management usually set low targets so that they can easily attain those low targets, and they get praise from that for that. Then also budgets are restrictive in nature, and also budgets, when higher targets are set, they can demotivate. And above all, budgets require time and are laborious. Let's move on to the template that I've set for you. I want you to follow this template, the sales budget template. The sales budget template is easy to follow from this. Let me just try to get my pen as fast as I can. Okay, it's a matter of just multiplying 100 times 2, you get 200. So I want you to try and complete this one. You memorize the template, then we proceed. Then we have got what you call a production budget. This is simple. Opening stock, you add purchases, you less your sales, that you get your closing stock. I want you also to try and follow this one, then we'll discuss later and fill in the space. Then we've got our material purchasing budget, our opening stock, then we've got our issues, our closing stock, then our purchases, our price, then you get the cost. I want you to try and do this again so that we discuss later. This is the assignment that I'm giving you. Can you go and do this one and do meet in our legs?